boy with accounting accidentally. This video is called Debate Fact Checkers and Tax Deduction Limitations. So as I record this, we've just gotten done with another presidential debate in the fall of 2024. We've actually had presidential debates since 1960. Whenever we have these, we always talk about debate fact checking. Did the candidates say things that were actually correct? So that's one thing that we've seen more and more in debates is debate fact checking. We also need to fact check when it comes to taxes. The tax code is very complicated, and if you're thinking about taxes in your personal finances, you need to closely understand some of the major deductions that you can take on your tax return. Understanding Schedule A. Some common deductions are calculated on Schedule A of the personal tax return, your 1040. 1040 has several schedules you may need to complete depending on your finances. It's likely that you'll have to use Schedule A. And a big factor here is adjusted gross income, or AGI, which is used to calculate the limits on several tax deductions, some of which are in this video. You can think of AGI as the total income you earn from all sources. It can be wages from work, interest income, dividend payments, gains on sale, income that you earn from a rental property, all included in AGI. So let's assume for this example that Sally has adjusted gross income, $96,400, which includes a whole bunch of sources: work income, dividends, gains on a stock sale. One of the deductions on Schedule A is medical expenses. So currently, Sally's medical and dental expenses deduction is limited to 7.5% of AGI. So the max that she could deduct is the 96,400 AGI times 7.5% or 7,230. That would be the maximum. State and local tax deductions. Taxpayers can deduct state and local taxes, but only up to $10,000 for a single taxpayer. So we're assuming that Sally is single. So if you assume that her state tax rate is 6%, her state tax deduction would be 96,400 times 6%, or 5784. So that would be for state. In addition to that, she could also have local taxes up to a $10,000 total deduction. Now, remember that high income earners in states with high tax rates like California, New York, as an example, may not be able to deduct all their state and local taxes. This is a big deal to people in those states. Finally, the mortgage interest, your home loan interest, and the points you pay when you purchase a home are deductible. Currently, as of 2024, that's the one I'm using. There is no limit on the mortgage interest deduction. There have been in the past. So the question now is, how does Schedule A deduction impact your 1040 return? Well, what Sally's going to do is add up all of her total itemized deductions on Schedule A, some of which we saw, and compare that to the standard deduction for a single taxpayer, which is set at $14,600 for 2024. If the itemized deductions are more than the standard deduction, she uses the itemized total. So if it's $20,000, she uses $20,000. Otherwise, Sally uses the $14,600 standard deduction. Work with a CPA or tax preparer on your tax return and take a look at these itemized deductions and see how they might affect your tax return and if there are limits to what you can deduct.